One of the key accounting cash controls of a business is a petty cash fund. A petty cash fund is an amount of cash selected by the business, kept on hand to pay for minor expenses. The general sizes and scopes of the petty cash fund vary across different businesses. Businesses needed the petty cash fund as most of them require authorised electronic transfers or double-signed checks for all disbursements of cash as a monitoring of the cash outflow system. However, for smaller instances where minor amounts of cash are required, such as postage fees, miscellaneous office supplies, and kitchen restock, the usual monitoring of cash outflow processes can take too long and become burdensome. The operations on all petty cash funds involve three specific activities, which are establishing the petty cash fund, making payments from the fund, and replenishing the fund. The petty cash activity of establishing the fund involves the business writing a check for the previously agreed amount of the petty cash fund, for example $600. The check is then cashed at the bank, and withdrawn cash is then placed under the care of a designated employee who is the custodian. Following these procedures, a journal entry must be made as a means of recording and setting up of the fund, and the withdrawing of the cash for the fund. The journal entry increases petty cash and decreases cash, without making any change to the business's total assets, as there is a specifically designated amount used for the petty cash fund. The second petty cash activity of making payments from the fund involves the withdrawn cash being used to pay for purchasing any approved expenditures once the petty cash fund is established. There are two ways in which the payments can be made. The first being cash can be taken from the fund to make the payment, or the second way, which is employees can request reimbursements from the fund for their personal payments they made. Regardless of the process taken, the designated custodian needs to receive authorization for the use of the cash in the purchase, then needs to collect receipts for all purchases made. The final operations process of the petty cash fund is replenishing the fund, which involves counting the remaining cash in the fund when the fund begins to decrease in order to begin the replenishment process. The business then cashes a check for the amount which brings the total remaining cash to the fund back to the original petty cash fund balance. The receipts of the purchases made with the fund are then used as a means of documentation for recording purposes. This is due to when a petty cash fund is replenished, the amount of cash required to bring the fund back to the original balance needs to equal the total amount of all the receipts. Petty cash fund is an important inner workings of the business, and all operational processes identified need to be conducted correctly for the fund to be worked as it should. Thank you.